Hi, everybody. This is Stock Chart of the Day, David Scarica. Hope you're all doing well. So today we're going to look at the employment report that just happened. Yahoo Finance. So basically they were expecting about 173,000 jobs, I think it was, and it ended up being at 216,000. Came in higher than expected. But the things that really matter for in terms of where interest rates are going or wages are going, or sorry, interest are like wages and that kind of stuff. And that was basically in line. So showing like, that huge inflationary um, um, pressures. So it did change the Fed funds futures we're showing a second a little bit. So, the futures ended up spiking down, thinking that, okay, well, stronger jobs number means less rate cuts, etc. And same thing, gold sold off. And then we've seen everything just kind of bounce right back. And, we see the 10-year bond up a little bit. The 10-year bond probably did shoot a bit, because we still have rates over 5%, right? And it's going to take probably till almost the end of the year for them to get to this 4%. So the 10-year bond, when it was well under 4, probably did, overshoot a bit. So now we'll look at gold here. I'll just refresh the page. You can see gold's up $1.40, and it was at one point you can see that spike lower, and then it's come back up. And it's actually most of these things, the markets, gold, etc., are actually higher now than where they were, pre the actual jobs report. So let's look at the Fed's funds futures. So they did change. So now you can see that this is March, which was like when I did this a little while ago, this was over 80% chance of a rate cut in March just a few weeks ago. Now it's only, you can see 57, and that's that's a half a point. So now we're like closer to 60%. And then we can see that now this is like one rate cut is basically almost certainly going to happen by May. But you can see May's second rate cut is actually more 50. It's more than 50%. There wouldn't be a second one by May. And then June, you can see, the third rate cut in June is only like a 44% chance. So essentially, we're seeing less rate cuts. And I remember I said too, when I was talking about rates, and I said, I personally thought there would be like 75 to 100 basis points, and the market had like 125 to 150. So I thought the market was being maybe a little, or the Fed, or the Fed fund futures market was being a little, more aggressive. So you can see this here, and this here 80% chance that we're going to be at 450 by say that's end of July. So 450 is 75 basis points. So let's just go to the end of the year to show all these. So yeah, so then if we add all these up here, you'll see again, it's roughly about 80%, just under 80% chance. We're at 400, which is 125 basis points. Well, it was like 150, wow. So we have taken that back. So essentially looks like, they could slow it down. And look, if they don't cut in March, I think they're going to start cutting by May, because I think we're going to see inflation in this 2 to 3% range. Look, I don't believe the inflation numbers, just so you know, but you gotta, you play with the hand you're dealt with, as the old saying goes. So, I'll just use them for this case. So I think once they see a number of months with that, then you can see that happening. So they might, if they put it off, from March 20th to May 1st, you're talking like whatever that is, 11 plus, 30 days in April, like you're talking 41 days. They put it off 41 days. Is it really that big of a deal? So, of course, if something were to happen, like a shock, like the stock market really tanking or that sort of thing, which I don't really think, I think a further of this correction could still be in the cards. But, the question we have to ask with all these markets, gold at its all-time highs, S&P at its all-time highs, are we just seeing this kind of little correction at the all-time highs? You see these kind of corrections all the time. Like I'll show you an example of this. We'll get the S&P going back. Here. So yeah, you can see when after the the COVID crash, here we got back to the highs, and then boom, boom, there are these two little corrections in here. So that's kind of normal that when often you can see these little corrections when you get back or about to break the previous like high and the whatnot, right? So in 2019, we were getting close to the previous all-time highs here. And again, you saw a couple of these little corrections off the resistance of the former high. So that could just be what we're doing here. And you can see like the 200-day moving average is, going to get to 4,400. It's about 4,500 on the 50. So again, you could pull back to these kind of areas. I was looking at 4,600 as kind of it, and we got to 46, about 80 or so. So we'll see what happens. And like I said, that, the fact that we've kind of seen this muted reaction here where, the future sold off and then the market has kind of like rebounded. We'll have to see. And remember, a lot of this early selling in the year was just, those magnificent seven stocks that I've talked about that people now can, book in their gains in that right now in 2024. You don't have to pay capital gains tax on that till April of 2025. So, that's, I think that's what some of that basically is. And I think there was fears, we'll show you one more thing before I end this video. Yeah, you can see that, the TLT is down a bit. So there was fears that, after this huge rally in bonds, that basically, the Fed wasn't going to really loosen, and remember, the Fed is always behind the curve. Just like in 2021, it was obvious that inflation was starting to pick up, and they were still like, oh no, whatever. They didn't start raising rates until inflation was at 8%, right around the time of the Russia. They were still doing QE when rates were inflation was getting to 8%. So I think they're, and go look at this rally in the bond, tells you they're behind the curve. They're still talking like hawkish type things. I think a couple of the guys have even talked like they might still do a rate hike or two, which we all know that's done at this point. So anyhow, I just wanted to show you that and show you that, yeah, stronger than expected jobs report. The market had kind of this knee-jerk reaction down, then came back up. We're basically flat to slightly higher on the market right now. The S&P up 10, the Nasdaq up about 20 or 30. So anyhow, yeah, just show you that. And so I have another stock chart of the day. Very cool one, a kind of a longer term chart for the week. So the way this works is, as of now, I think I'm going to plan it as follows. Because I'm really starting in the middle of the month. I'm going to ramp up the Patreon pay or lifetime version around the 15th of the month. So at that point, I think I'm going to do these. I always like to do a weekend edition. So I'll do a Sunday morning chart, and then probably a Monday, Wednesday, Friday chart. I might do the Friday chart either Thursday or Friday, no matter what. And then I'll have 2 members updates a week, probably one during the week, and then one that I'll do late in the week that I'll put out on the weekend on Saturday. So that's basically going to be it. So there'll probably be about 5 to 6 a week. And I've got these discounted rates on the Patreon on lifetime memberships. I'm gonna I was gonna stop those on January 8th and then go back to my to regular rates. I'm gonna extend that to January 15th, and I'll talk more about that next week. Part of the reason we're getting into January 8th, and I wasn't really ready to do the final kind of promotion on that. So I can talk about it next week. So anyway, I hope you enjoyed this stock chart of the day. The one I have for the weekend is really cool. I was at my friend's restaurant on a beach here. It's like the greatest view you've ever seen. So that's kind of I did a little clip from the restaurant on the YouTube page if you want to look at it. It's the clip actually has almost 1,000 views, which is incredible because most of these things get a few hundred right now. So so I'm happy about that. So everybody take care, and I hope you enjoyed that this weekend update. I think you'll really like it as well. So 1 second. Okay, thanks.